Hi, good morning, everyone. So welcome to our daily briefing today. So today is January 4th, which is Tuesday. So let us begin our daily briefing by take a quick recap on previous important economic data. So the first one is Germany market manufacturing PMI final December. So previous is 57.4, forecast is 57.9, and the actual is slightly lower than the forecast, which is 57.4. It's slightly lower than the forecast. So this is a negative for euro dollar. And then we go to the next one, which is the United States market manufacturing PMI final December. So previous is 58.3, forecast is 57.8, and the actual is 57.7, slightly lower than the forecast. So this is negative news for the USD. But then the US dollar index rise up on yesterday. They can take a look on, let's take a look on the USD as the market graph here. So rise up instead of go down. Okay, so let us go back to our PowerPoint, and then the next part of our daily briefing today, which is the previous day market volatility recap for gold. It's declined 290 pips on yesterday. So what happened on the gold market? Let's read the market volatility factor here. So the rise in risk sentiment in the stock market put pressure on the price of gold. The investors turned a deaf ear to the impact of the Omicron variant COVID-19 virus. So spot gold fell 1.5% to close at $18 and $1.45 per ounce, the largest single day percentage drop in more than a month. The 10-year US Treasury bond yield rose to a six-week high, weakening the attractiveness of non-yielding gold. So that's the reason the gold prices fell down yesterday. Okay, then we go to the next one, which is the WTI crude oil. It declined 200 pips and then rebound. So what happened on the oil market? Let's read the factor here. So oil prices closed slightly higher on Monday, and the market is hopeful for further demand recovery in 2022. Although the OPEC Plus seems to agree to continue to increase production, and there are concerns about how the rising Omicron infection may affect demand. OPEC Plus is expected to agree to increase production in the meeting today. Okay, then we go to the next one, which is the US dollar index. It rose 60 pips yesterday. So let's read the factor here. So the US dollar index rose 0.57% to 96.21, in line with US Treasury bond yields. Investors expect the Fed to raise interest rates in 2022. The US dollar index rose 0.6% intraday, the largest intraday increase since November 10. Okay, then we go to the next part of our daily briefing today. So in EU section, we have to focus on this important economic data. So let us take a look on the first one. Germany retail sales month-on-month November. So previous is negative 0.3%, forecast is negative 0.5%, schedule is at 3 o'clock in the afternoon today. So if higher than expected reading should be taken as positive for the euro dollar, while a lower than expected reading should be taken as negative for the euro dollar. Then we go to the next one, which is the Switzerland inflation rate year-on-year December. So previous is 1.5%, forecast is 1.6%, schedule is 3:30 in the afternoon later. So the impact on the currency may go both ways. A rise in CPI may lead to a rise in interest rates and a rise in local currency. On the other hand, during economic recession, a rise in CPI may lead to a deepened recession and therefore a fall in local currency. Then we go to the next one. Germany unemployment change December. So negative, previous is negative 34,000, forecast is negative 15,000, schedule is 4:55 in the afternoon today. So if higher than expected reading should be taken as negative for the euro dollar, while a lower than expected reading should be taken as positive for the euro dollar. And then we go to the next one, which is the Germany unemployment rate December. So previous is 5.3%. Forecast is the same at 5.3%. Schedule is 4:55 in the afternoon later. So if higher than expected reading should be taken as negative for the euro dollar, while a lower than expected reading should be taken as positive for the euro dollar. And then in US session tonight, we have to focus on this important economic data. So let us take a look on the first one. So US ISM, United States ISM manufacturing PMI December. So previous is 61.1, forecast is 60.2, slightly lower than the previous. So schedule is 11 o'clock tonight. So if higher than expected reading should be taken as positive for the USD, while lower than expected reading should be taken as negative for the USD. Then we go to the next one, which is the United States JOLT job openings November. So previous is 11.033 million. So forecast is remain unknown. Schedule is same at 11 o'clock tonight. So if the reading is stronger than the forecast, is generally is supportive for the USD, while weaker than forecast reading is generally a negative for the USD. Okay, so we go to the last part of our daily briefing today, which is the market update for gold. So the resistance level of today is 1813. So the support level of today is 1795. My personal opinion, always take it, I repeat it as a bearish movement for today. So why bearish movement? So let's read the factors here. So on the first trading day of the new year, which is yesterday, the US dollar rose against a basket of currencies, synchronizing with US Treasury bond yields. Investors expect the Fed to raise interest rates in 2022, so which is this year. Affected repeatedly by the COVID-19 epidemic, the US economy achieved strong growth in the first half of 2021, which is last year, but it decelerated sharply in the third quarter and then rebounded in the fourth quarter. Okay, so the Fed's interest rate hike expectations have once again heated up, so that the price of gold has been under tremendous pressure, but the price of gold is still struggling to hold the 1800 mark. As we can see that it still stay above 1800. Okay, so the confidence of the short-term bulls has suffered a major blow. So that's why we will predict it's a bearish movement. So focus on the US December ISM manufacturing PMI and the JOLT job openings data today. So that's all for our daily briefing today. So we should have a great day and see you again. Bye-bye.